Good morning, students. Let us start chapter 3, 11th class, Business Services 2. Now in this chapter we are going to learn about the bank. First let us see what the meaning, what bank does. The bank is, as per the Reserve Bank of India, the definition says that according to the RBI, bank is an institution which collects deposit in order to lend money with condition to return it at the end of the fixed term or whenever it is demanded. So what the word meaning of this line? Here it is said that bank is supposed to collect money. Whose money? People money. It's money does the savings by people. You and I, we go and keep our money deposit into bank. So on one hand, bank is collecting money, and to provide an incentive, bank is giving rate of interest to the depositors so that they give their money, ideal money, extra money to the bank. The same money, why bank is collecting? Because bank want to give it to those who are in need. The businessmen are there, the individuals, those who have personal need, those who want to start their business and a startup activity. So those who are in need of money, they ask for the money. Here the condition is that this money to be returned. It is not given to you forever. You have to return. And either you are returning at the end of the fixed term, the period is predetermined that at this particular period money has to be returned in. Or you may be returned as per the demand. The depositor, those who have deposited their money, they also can ask their money as per requirement. At the same time, the person to whom the money lended, they also, we can get the money back from them. So in this manner, bank does the business of finance, business of money. Bank does the buying and selling of money. So in other words, you can say the institution providing services of the banking, that is what called as a bank. Whatever bank services are there provided by the institution, that is called a bank. In a very layman language, you can say that bank trade money. Trade money means buying and selling of what? Of money. So businessman does the trading of the goods. Here bank does the trading of money. So this is way you can say the bank can be understood with various aspects. Now to know further, the functions of bank are to be discussed. That what sort of other activity bank does. We have simply said that getting deposits and lending money to someone else. But over and above, bank does so many more other functions. So the functions can be classified into two categories. Number one is the main function, the basic fundamental functions of bank. And number two is their subsidiary function. Let us concentrate first on the main function, that which are the basic, the bank has to do these many activities without fail. The very first, to accept or collect deposit. Here we have already said which collect deposit. So the basic function which is already mentioned in the definition, that is what the collection or acceptance of the deposit. So how many ways are there that bank can collect the deposit? Bank can open the savings account. All the general society people, they go to the bank, approach and ask for their opening a savings account. So here, what money you have something extra, you are giving it to the bank, deposit into bank, and bank gives you rate of interest on your savings. So all your ideal money otherwise remain the same at home. If you give it to bank, the chances and probability are there of raising your money. Longer the duration you keep your money in the bank, more the interest you will get on it. That is what the savings account, all the lay person open their account in the form of a savings account. The second is, that is the current account. The businessman, their main purpose is that they don't want interest, they want more service. They want that bank provide them number of transactions, number of time withdrawal to be done, number of time the deposit of money to be done. So here on the current account, the character is that current account opened by the businessman on which no rate of interest is given, but you are free to operate your account as many as time you want. So bank is providing you service, and so that bank don't give you rate of interest. The third is that is the recurring account. The word itself says recurring, occurring again and again. You deposit your money at a particular period of interval, a particular amount. At the end of maturity, you will get your invested money plus the rate of interest which is offered by bank. Now, the savings account rate of interest is lowest and recurring account interest is little higher than the savings account rate of interest. Here, you are bound with the terms and conditions. You accepted that yes, for 12 months or for 24 months or for 36 months, continuously I will deposit a particular amount with the bank on a particular day, and that too a particular rate of interest. So that way recurring account can be opened. The next is fixed term account. Fixed term account, or you can call it as a fixed deposit account. Suppose a person is having a lump sum amount of 2 lakhs or 5 lakhs or 50,000 or whatever the figure. You go to the bank and ask the bank, I want to put into the fixed deposit, means for the 12 month or a 3 years or a 5 year, my money will be blocked up, but I want higher rate of interest, because a retired person or a housewife or those who are seeking for a regular income, they go for the fixed term account in which you are investing your money for a predetermined rate of interest for the predetermined period. Till that time, you are not allowed to withdraw the money from that deposit. If you do so, the penalty charges will be applicable, and according to terms and conditions, the rules will be applicable. So in this manner, the first function of bank to accept or collect deposit, it may be in any one of these 4 methods. Second, whatever money bank has collected, bank may be collecting, nowadays the rate of interest is between 5% to 6.5%. So bank is collecting at this rate of interest. Now this collected money, bank is not going to keep it own self. Bank is going to lend this money to those who are in need. So you may be taking money as a loan. It may be a personal loan. You are taking money for construction of a building, or for a celebration of the marriage act of your children, or for the education purpose of your children. You may be taking a loan for a particular reason and you want money. Now, second reason, you may be overdraft and cash credit. You are taking money for a short term duration in the form of overdraft. What that overdraft means? When the trader withdrawing amount more than his balance, that is what called overdraft. So bank allows you a limit that up to this limit you can withdraw more. When the same thing is done for a longer period of time, the facility for an excess withdrawal is given for a longer period of time, it is known as a cash credit. Normally to the big businessman, the cash credit facility given, to the small trader, the overdraft facility given, and to the individuals, the loan facility given. Now for the loan, overdraft and cash credit, especially for the loan, the hypothecation is required. You may have to mortgage your asset according to the amount of loan and term of loan. The rules and regulation will be applicable. Now, bank is offering to the people 6.5%. So here you are going to get loan at 10% to 12% or as per the need and the reason. So the difference you can easily derive, that 6% you are giving, 12% you are earning. So that is what the margin, that is what the profit of bank. So bank is trading money, one hand receiving, other hand giving, in between they get the difference of rate of interest, that is what income for the bank. So in this way bank does the profit. Third is that it do the invest money. The function is that whatever extra money you have, that extra money to be invested. Where the bank is going to invest this money? Bank will invest extra money to the government security as per RBI rule. Because any excess of money cannot be kept in the bank in their locker or in their cash box. So the extra money immediately whatever they have is to be invested. Or they may invest such extra money into the financially capable unit. Those business unit which are sound, because ultimately this money belongs to the depositors. You have to return one or other day. So you can't afford to lose your money. So you need to have a secure place of investment. So investment done to the government as a secure place. Here no doubt the rate of interest bank will be earning little low, but still bank prefer only government security or a financially capable unit. Now in this process, accepting deposit and lending money, sometime bank is in need of financial more crunch, or bank may suffer a financial short-term liquidity problem. So when this particular thing is there, bank does the interbanking transactions. Interbanking transaction means SBI bank, sometime it may happen that they need 10 crore rupee immediately for some payment. At that time bank don't have that 10 crore cash on hand. No bank has that much money cash on hand, because money is in rotation. Money always pass on from one hand to another. So nobody has this. So when you need a financial problem, face a financial problem, you approach the another bank to get a little short time period financial support. So that is called as a interbanking transaction. So what the meaning is that when one bank is in need of a short term money and they demand from another bank, where they go, they demand from another bank. This particular demand of money is known as a call money. You may have a 1 mark question that what you mean by the call money. So call money means when bank is in need of a short term financial problem and want money, another bank is approaching. Now this system, one bank is not going to meet another bank. Here the RBI has appointed the agencies to set off all these internal problems between one bank to another. So that this arrangement is made by the agency appointed by RBI. So for your MCQ you have to remember that who made an arrangement for interbanking transaction. So RBI make an arrangement. Now the demand and supply, that will decide the rate of interest on such short term call money. So that the rate of interest is paid on call money is known as a call money rate. Again for 1 mark you have to write what you mean by call money rate. The rate which is paid by one bank who is in need of money to the another bank who is giving you money, and that rate decided according to demand, supply and situation. So this word, two terms we have learned in this point. One, what you mean by call money. Second, what you mean by call money rate. And the third MCQ, who make an arrangement for the call money supply. So this is the way that bank does the interbanking transaction. So these are the main function of bank. First, to receive money. Second, to lend money. Third, extra money to be invested into government securities. And fourth, If sometime you are in need of money, you can approach the other bank to satisfy your short-term need. These are the basic functions of bank to be called. Now, the subsidiary bank functions. The other subsidiary over and above this basic, the subsidiary functions are done by bank. The very first is to look after the financial transaction of customer. As you enter into bank, you always observe that some person is there to care for you. Some person is there who is going to tell you that what problems you have, either to deposit money or to withdraw money or to invest into the mutual fund or to do the fixed deposits or whatever. So whatever the financial transaction of a customer are there is a person to listen to you. Next is to do the transaction of the foreign exchange. When you have to do the trading, that is internal trade and external trade. For the external trade, you need the foreign currency. So from where the foreign currency to be managed? You have to approach the bank and bank will handle your need of foreign currency. Number next, to issue the letter of credit. When you do the foreign trade, the opposite party who is selling goods to you, for them you are unknown. For them, they don't have trustworthiness in you. So to ensure the trustworthiness, you approach the bank. Bank manager, he look into the financial transaction of your bank account, and if he found everything sound, then he will write the letter of credit. Letter of credit means one kind of a letter in which bank manager assure the guarantee for the payment in future that you are going to make. So this letter of credit is one of the important document for the foreign trade. Without this letter, foreign trade transaction won't possible. Next is provide the draft services. Here you need so many times the money to be transferred from one place to another, and for that you are going to ask for the demand draft. So this draft facility also provided by the bank for the easy and secured money transfer from one place to another. In the business, this type of demands are more and you need such facility. Number next is to provide the information related to credit of a person associated with the bank. Any other institution from where you want more finance. So again you need your reference, again you need your reliability letter. So it is very much related to your letter of credit and very much related to assuring your financial soundness. So this also provided by one bank to the another financial institution regarding you, because businessmen can't only borrow from one institution, they borrow from number of institutions. So here other institutions require reference from one your main account. So that will be done. Next is to provide the services as an underwriter. Underwriter is a very important word. The new business company, when they are putting their subscription into the market, that is the shares, when they launch their public issue into the market, there is a doubt because people are not knowing this management much. So there is a doubt that your subscription may not reach up to minimum subscription. So in that case, you ask a bank to be a underwriter. It means that bank give and guarantee and assurance that if the general public fail in subscribing the minimum subscription of your public issue, we are there to support finance and your minimum subscription target will be achieved. So this is what a very important service provided by bank. For such service, bank also charge underwriting commission. It means that expense for businessman and income become for bank to provide guarantee for underwriting the public issue. Next is that is to issue the traveler's check. Now when any businessman, he visit from one country to another, the hard cash difficult to carry, or any layman if going on a tour, then again hard cash cannot be kept on hand up to beyond certain limit. So at that time the currency is converted into the form of traveler's check. Nowadays we have the debit card and credit card, but earlier days there was no such e-money. So in absence of e-money, the traveler's check was the safest way of carrying hard cash along with you. So traveler's check is one of the system facility given by bank. We will study in detail about this later on. Other services also bank provide, like that ATM, that is automated teller machine. You all know very well, you must have visited. You go to the ATM machine, either you withdraw money, you deposit money, you get the statement, you may transfer money from one account to another, and so many functions can be done. So 24/7 and 365 days the banking activity can be done with the ATM. Then there is the Demate account. Demate means dematerialized account. The shares and the stock that what you have now the physical form is converted into Demate form. Easy for everyone to trade into the stock market. It is now compulsory that your stock has to be demated. So dematerialization of your stock facility given by the bank. Bank also provides debit card, credit card. Debit card means your card by which whatever is there in your bank account, only that much money you can withdraw or you can use as you need. And credit card means you don't have cash just now, but still you are allowed to use money for a particular period of time according to your financial capacity to return the money to bank. So in this manner debit card, credit card are used. The next is that is the safe deposit vault. The valuable things of the customer is kept in the safe deposit vault. The additional facility given by bank, you have to pay rent or for the safe deposit vault. Annual rent charges are charged by the bank, and there is a limit of withdrawing things from it and keeping things of it, means the use is restricted up to the limit and you are making payment. Even the safe deposit vault, whatever you keep into it, you have to insure additional insurance also to be taken for the safety of your belongings. So in this manner bank provide all the other subsidiary functions along with the main function. Now for your homework, you have exercise on page number 30 and 31, question number 2 of that one-liner answer, question 1, 2 and 3, and question 5, that is of a 5-mark question, that the meaning and the all functions explained in detail, that is of 5th question, point number 1. This is what your homework, and what today we have learned is our meaning, its functions, the main functions along with its subpoints as well as the subsidiary function. This question mainly you have to prepare for the 5-mark. It is going to be directly or indirectly asked in exam. So prepared from 5 marks point of view the functions of bank. Thank you.